Hello and welcome back to the Prody Academy YouTube channel. I'm Michelle, and in today's video we're going to be discussing how to avoid some common accounting issues so that you don't let accounting problems sour your wines. Wineries need to pay attention to every detail when it comes to accounting. You need to keep an accurate record of the total amount of wine that you've produced in the year, and even a simple mistake can end up costing money and time. There are two mechanisms that ultimately decide whether you'll stay in business or not. The first is how much profit you make is determined by the market based on how much someone is willing to spend on your bottle of wine. Now, the wine industry is growing rapidly in many parts of the country, and because of the increased competition, wineries will need to be creative to differentiate their products in order to demand higher prices. Secondly, the costs of making and selling wine determine how much profit is left. And since there's not much wiggle room to increase the revenue from one bottle, how you understand and control your costs has the greatest impact on your winery's profitability. So with that said, we're going to be discussing some of the difficulties wineries face when it comes to tracking the accounting of cost of goods in producing wine. Now, a winery has four main operations. Well, five if you are vertically integrated and harvest your own grapes. But we're going to just briefly touch on what these operations are. So first up after harvesting is the crush phase, where grapes are pressed and squashed. Second is the fermentation stage, and this is the most vital part when it comes to producing wine. Fermentation will continue until all the sugar is converted into alcohol and dry wine is produced. The third stage is clarification, and this is where the juice is separated into tanks. This allows the sediment to drop out, and winemakers will rack or siphon their wines from one tank to another. Wine is separated from the solids, which is known as pomace. And last up, we have the wine is aged and bottled. Now, there are many choices and techniques in this stage, which results in the many distinct types of wines that you'll get. Of these steps, the crushing and bottling phases are quite short, while the other stages can be exceptionally long. Because of the time it takes to produce the different types of wine, you'll need to keep careful track of how long it takes each type of wine to produce. For example, if we have a red wine with low production values, this would take less time to produce than a high-grade red wine. So consequently, the high-grade red wine should accumulate more indirect costs. Now, indirect costs include things such as depreciation on the production facilities, labor by the wine master, utilities, production supplies, and testing expenses. Your record of costs will include taking into account any wine that was transferred from barrels or tanks, any wine that was spoiled before you could sell it, as well as any wine that you gave away for free or dumped because it was unsellable. These costs are what is called the cost of goods produced, and they include all the costs that went into the making of the wine. So they would include the raw materials, the labor, the overhead, the direct and the indirect costs, which were incurred from the crushing phase all the way through to the bottling and storing of the wine. When a bottle of wine is sold, the cost of producing that specific wine is recorded as the cost of goods sold. And the difference between the revenue generated and the cost of goods sold for that product is the gross profit that you will make on the wine. Activity-based costing assigns overhead costs and indirect costs to related products. Now, activity-based costing enhances the reliability of assigning costs, and this enables wineries to have a better understanding of the costs that were associated with producing the wine. Wineries use a variation of activity-based costing where they assign expenses to each functional area in the winery. The costs are then allocated to what is a gallon month for each wine product. So for example, if we have 100 gallons of Pinot Noir aged for 6 months, this equals 600 gallon months. And if it costs $10,000 to store the wine, then these costs are assigned to the Pinot Noir based on its share of gallon months of wine stored. Because of the unique aspects of making wine, the tracking of costs can easily become complicated. Wines are commonly held in storage for longer than a year, and so not only do you have to allocate the costs between the different types of wines, but you'll also need to allocate costs to vintages of each varietal. Due to the lengthy process when it comes to making wine, it is common to lose some to evaporation. And in addition to this, if the wine master engages in the blending of 2 or more wines, you will have calculation changes because of how these separate costs are allocated between multiple wines. As complex as tracking costs is, you may be asking whether it's even worth it. As a winery, you have various sales channels that have various profit margins. Many of the sales will go through distributors who expect lower prices so that they can also make a profit. You may only make 10 to 30%. Where performance is measured, performance improves. And as you meticulously track your costs, you can improve these margins. Other than to improve profit margins, another compelling reason to keep track of your costs is because it is required by the Federal Alcohol and Tobacco Tax and Trade Bureau, or the TTB. Federal regulations include tracking weight tickets when harvesting and how much wine is available after production. In addition to the TTB, the IRS wants to see the profit levels for each product sold, as well as proof for those calculations. When the production process takes longer than 2 years, the IRS wants wineries to allocate interest costs. They also want to see separate calculations for the source of the grapes, the type of wine, how long it takes to age, and the size of the storage containers used. The IRS has even created a wine industry audit technique guide. As always, we trust you found this video insightful, and should you have any thoughts, comments, or suggestions for future content that you'd like to see, please feel free to drop it in the comment section below. Please also join us on our social media platforms such as LinkedIn and Facebook, or at our website at proteafinancial.com. Protea Academy, striving to achieve better accounting for everyone.